And welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT. This is the Traders Workshop portion of the live stream where we are pleased to have NinjaTrader ecosystem guests come on and share their expertise with you. Today, we welcome the return of Dean Rogers from Kase Company. How are you, Dean?
Hey, doing well, Tom. Really good to join you all again. Always a pleasure. I enjoy this so much.
Oh, it's great to see you and great to talk to you. Um, how's everything going? How was your holidays? Were good?
Things were good. Yeah, it was very nice, very relaxing. Had my girls in town from college, and so I got to spend some time with them, which is always wonderful. And yeah, things are good. Things are going well. Trying to keep up with these crazy markets.
Oh, I know. And it's funny you say that. Friday I took the day off, but had to look at what was going on in the markets and just, I forget every year. It kind of surprises me how the market moves on the day after Thanksgiving.
It's always odd. Yeah, that Friday, I always get a little nerve-wracked, or not nerve-wracked, a little frustrated because you have Thursday off and then I have to come back in on Friday because I do reports over the weekend on all the energy and metals markets. So I write up a big analysis on Fridays and Saturdays. And yeah, you come in on that Friday and it's always kind of crazy. It's one of my old colleagues and mentors, this guy, Cliff Wilson. He worked with me and Cynthia for a long time. He always used to joke that right around that Friday or the week of Christmas, you've got the JV in. And he would always talk, just from the standpoint of all the big traders, the senior guys are out.
Right.
And he's like, so you get some weird, crazy activity on those Fridays, or those holiday kind of trading. And yeah, you can see some crazy stuff happening. And sometimes it can be, give you some head fakes and stuff too.
Right.
So it's you got to be a little cautious with those trading days.
Yeah, I notice it around 4th of July as well,
Yeah, yeah,
you know,
exactly,
these
exactly. You get
holidays.
some head fakes and some things that can sometimes when you're looking at the analysis the way that I do, especially with like the Fibonacci projections and retracements and those kind of things. That's what I use a lot of. And yeah, it'll sometimes take out some targets. So you got to kind of take some of those trades or those directional moves with a grain of salt and just be a little extra leery.
Yeah, and that's knowing the chart, right? Knowing what the days are. It's easy to remember, on Monday after Thanksgiving, okay, yeah, Friday is what it was, but 2 months
Yeah,
later you have to remember, okay, when was Thanksgiving and what day was the Friday after and is this real?
yeah,
Um,
yeah.
but you mentioned energies and metals. I know that that's your specialty. You
Yes,
can do
sir.
chart analysis on anything, right? But
Absolutely.
we're going to focus on energies and metals. Um, is there a place you want to start? We were looking at silver, and I'm looking at this great
Yeah, I
silver
brought up the
chart.
silver chart because I heard one of your viewers was asking about silver, and I thought, silver's got some cool little setups right now and
Okay.
things that I'm looking at. And today what I wanted to focus on, I'll show a little bit of our case statware indicators and stuff like that, but really wanted to focus in a little bit more on what really made me fall in love with technical analysis. So when I very first started working with Case and Company almost 25 years ago, Cynthia started showing me, Miss K started showing me, the Fibonacci stuff, Fibonacci extensions, retracements, those kind of things. And that's what she based a lot of her, wave formations and that kind of stuff, based a lot of her analysis on when we were looking at, back then we just did crude oil or WTI, crude oil and natural gas. Now we've, developed in-house models and programs that allow us to do this on a whole bunch of stuff. So all the different base and precious metals, all the different energy markets. And so, yeah, I didn't know anything about technical analysis. I didn't know anything about the futures markets. The only futures markets when I was in my interview with them was they asked me if I knew the futures markets. And I told them, well, I know frozen concentrate orange juice from that movie Trading Places. But that was about all I knew. So it was a steep learning curve, but this is what, I'm a big math guy. My background's in computer science and programming, and this really was neat, so it's something I have a lot of passion for. It's probably my favorite part of what I do is this analysis. So I wanted to talk a little bit about that, and we'll look at some of the indicators and stuff too. But the first thing I have up here is that silver chart. And you'll notice that it's pretty blank right now. The only thing that I have on is our case swing indicator. And this is, when I start looking at a market and when I'm starting to do some analysis, I kind of like to look at a very blank chart, and I want to look at the swing indicator. The swing indicator, can be adjusted to various um, swing sizes and things like that. This is part of our case statware package. And it's something that, allows me to kind of look at the waves, look at the wave formations. We can kind of see that we have a 5-wave formation coming up here from the 2739. I'm not in love with the idea that it's a 5-wave because it doesn't fit all of the criteria of the pure Elliott wave, where you have, waves 1, 3, and 5 break down into 5 subwaves, and, 2 of the 3 impulse waves have to be equal. And, there's a lot of rules around Elliott, right?
Right.
And so I'm not a big Elliottician, not that I don't believe in it, but I look for, 5-wave counts, but a lot of times they might be kind of nested 3-wave counts where we have, an ABC within a larger structure, ABC, something like that, right?
Hmm.
And so I'm not too concerned with, hey, 5-wave trend, 3-wave correction, those different kind of things, because, one of the things that we have right now is like, if we want to call this a 5-wave move up, well, this would have maybe been a 3-wave or should have been a 3-wave correction, right?
Right.
Um, but it looks like a little bit of an extended correction. And the reason I say that extended correction is when I start looking at the Fibonacci extension here coming down from this first wave, or what we would consider to be maybe wave A, you can make it down to this 3019, which is the extended wave C, or what we call the 2.764, 276.74 extension. So these are the extensions that I look at. I look at the 61.8, which I call the smaller than the 100, which is the equal to the 1382, which is the intermediate, and the 1618, which is the larger than. And so we've had this move down. These are really good for looking at support, resist. But I'm also looking for waves that might extend where those targets are going to be if we want to set some profit targets, those types of things, right? Right. So, right off the bat, we can see this, okay, if this is a 3-wave correction, that correction should be complete. Well, it might be the case because we had this 3018, we saw it bounce and retrace. So when we had that retracement, at the time coming off of that low, it held right around the 38% retracement. Now I
Right.
look at slightly different retracements than some people. When I learned this, Cynthia taught me instead of 23.6, we use 21% because it's a Fibonacci number. We also use 78 and 89. So that's just what I've gotten used to. These are the numbers that we use. We also, the 38, 50, and 62. For me, as far as retracements are concerned, the 38 and the 62 are most important.
Sure.
Generally, a correction is going to, like a simple correction is going to hold the 38. An extended correction will have to hold the 62. If we end up closing above the 62, in this case, that tells me that that move down is more than likely complete. It's probably done.
Right.
And that we're shifting directions in the bigger scheme and bigger picture, right? Now, right now, the other thing that we have is we have right down at that 3019, we bounced up off of 3018. We held that 38. We came down. We had the big down candle day, kind of a bearish engulfing line, although, it's within a down move. So I'm not going to put too much weight in saying that it's a reversal pattern like we had up here. Came down. We had to move back up on Friday. And, that when I was looking at this on Friday, this is one of those things I kind of took with a grain of salt because I was saying, well, look, we have that double bottom. We had that move up, but it's kind of had some downward momentum to it. Maybe we're going to try to test that 3014 again. We started coming back yesterday, was able to hold Friday's midpoint on a closing basis. Today, we're pushing back up. So the thing that we have right now that looks interesting to me, at least here on the daily chart, and I know that you all were looking at intraday charts, and that's fine, from a day trading standpoint, intraday trading. But this is what I'm trying to develop here is kind of a sense of market direction, and are we getting a reversal into a new trend up? Are we going to break to the downside again and break down? So right now, in my mind, I can immediately say, well, hey, look, if we break that 3014 double bottom, if we close below that, that negates the double bottom. We're probably moving a lot lower. And at that point, I'm going to start looking at my extensions for what would be this new primary wave down, because when I'm looking at a primary wave, I want to see the largest corrective leg of that
Right.
wave.
Right.
And so, and it might be a 5 wave down. We could say 1, 2, 3, this is 4, and then now one of 5, 2 of 5, 3 of 5, so on, maybe extending whatever else, right? So, but we know that if it breaks that 3014 area, we're probably going to be moving down towards this 2873 in the bigger picture, right? That's, it's going to take some time, but this is kind of bigger picture view right now. Otherwise, if we can move above and close above the 32035 swing high, that's going to confirm the double bottom. And at that point, I would think that we're having a reversal back to the upside. So if we break above this equal to target or the 32035, we're going to see an extension to the upside, at which point, let's see if I can get this to, I don't have the 200 in there usually. Really quickly. So our target for that double bottom is 3381. Okay, so whenever we're looking at a double bottom
Right.
pattern, we basically have the 3014 is our double bottom between the 3010 and the 3018. I'm just splitting the difference. We take that distance between 32035 and the 3014. We add that distance or that difference to the 32035 swing high. That would give us something right up around 3381 as our target for the double bottom. What's that going to do for us and for the move? That's going to push us above the 62% retracement, which I was just saying a few minutes ago. When we get above that 62% retracement, that's going to tell me that move down is most likely complete.
Right.
So
Right.
I've built kind of a trading framework in my mind with this. Go ahead.
So some points there. I think um, explaining the double bottom was excellent, right? Uh, if you want to do this in other markets, if you identify those two places that form that double bottom, you're looking for the highest point between them. In the case of a bottom, you look at the
Right.
highest point between them, and that is you've kind of boxed out an area that we might be range bound here, but if we break out of that range, well,
Right.
the thing about patterns is we like to use them for targets, right? It's not
Right.
just enough that we break out, but can we use this information to find a place where the market will go? And that's why Dean had that 200% retracement, because that's really, it's just taking that move from the high of the double bottom to that bottom and saying, okay, well, if that's 100%, let's make it 200%. Um,
Exactly.
and I like that idea of negation, right? These Fibonacci retracements aren't always targets. They can
Right.
also be confirmation of negative things, right? This downward trend is essentially done,
Mm-hmm.
if we can close above or trade completely above that 62% level.
Yeah. Well, and the biggest thing that I look at, and that's an excellent point, is, I also, the bigger thing that I'm looking for is confluence.
Hmm.
So, and what I mean by
Yes.
confluence is I'm looking at lots of different things. Like usually I would have moving averages on here. I'd have like the 20, the 50, 100 to 200. I'd have, maybe some indicators and stuff like that, candlestick patterns. So like completion and confirmation points of candlestick patterns. All of
Right.
these things we plug into our models that we've built internally, and then it looks for confluence points. But one of the things that we can kind of see here is, and we know that 32035 swing high is very important. But we can also see that that's sitting just below the 38% retracement.
Right.
It's the equal to target. So we've got some confluence and also some better examples of that here in a minute on some other charts. But we know where these confluence points are. It tells us where the big support, the big resistance are. And a lot of times, like you said, these aren't just targets for where the market's going to go, but they can also, especially with the retracements, tell us whether or not a move up or down is in trouble. If we
Right.
close above that 38% retracement, well, not only are we confirming the double bottom, but we're also in a situation where it's starting to give us a warning sign that, hey, this move down, something's changing, sentiment is changing. And now we're going to try to really push to the upside to see if we can fulfill not only the target of the double bottom, but also get above that 62% retracement.
Right.
So some
Right.
interesting things going on here right now with silver. But to try to change it up a little bit, Let's look at, I know you guys were looking at crude earlier. And crude is one of those markets right now. We've been in a range. Let's bring up the daily. And I have a lot of stuff on the chart here. I know it's very congested. This isn't like the chart that I would be trading off of, so to speak. This is my chart that's kind of helping me set up my framework
Right.
for the trading. You know, and I think that we have to remember, we have trending markets up and down, but then we also have a neutral market. And neutral markets are, in some ways, a little bit of a gift. They're frustrating. They're extremely frustrating. Like crude has been frustrating the heck out of me for the last month and a half because it's just been range bound. And each time the market has looked like it's ready to break either higher or lower out of that range, we've seen a reversal in the
Right.
opposite direction within the range. And that's looking like it's going to be the case again this week. We had come down, and I know it's a little hard to see here, but right around that 67.90 area, we had the smaller than target or the 61.8 projection of the wave down from 72.41. Now, in studies that Ms. Case and I have done over the years, generally speaking, once you close beyond that smaller than or the 61.8, you usually have around a 70, depends on the market, but 70 to 75% chance of extending to at least the equal to or the 1.00, which would have been down here around 65.60, and a confluence point with the 61.8 wave down from the 77.04 high. So what is this telling me? Well, if we were able to close below this 67.90 area, we should break lower out of this range. We have a little double bottom here right now, right around 66.40. It's arguable whether or not it's a double bottom, but I would call it a double bottom.
Mm-hmm.
And the confirmation point for that is 72.41. Well, 2 weeks ago, we had this wave up from the 66.32. It overcame at 60. It closed above the 61.8. That would have pushed us up to the 72.60 level for the equal to, or the 1.00, or the 100, which is also the 62% retracement of the move down from 77.04. And now it's also sitting right around the 100 of the wave up from the 66, what is it, 66.53, I think it is.
Mm-hmm.
So again, looking at all of this, what we can look at and say is, look, right now, we know the boundaries of the range. And so from a trading standpoint, even if this were an intraday chart, the same thing applies, the same concepts apply. We know where we can place our orders to get in and get out, whether or not we're going to be getting or breaking higher or breaking lower out of this range. So right now, one of the levels that I like is 71, because if we close above that 71, we should be trying to push up towards that 72.80 area where we have that confluence between all of these different targets, plus the confirmation point of that double bottom. Right. So again, we're looking at a number of different waves and retracements and patterns that give us these confluence points. We know where the breakout points are. And so we can in our mind be ready for that breakout.
So Dean, just real quick, because crude is
Mm-hmm.
an unusual, or it's a unique, I shouldn't say unusual,
Mm-hmm.
it's unique in that there seem to be such varied influences on
Mm-hmm.
crude, right? There's
Mm-hmm. Yeah.
geopolitical influences, there's economic influences, there's
Yeah.
what I call artificial influences like OPEC
Mm-hmm.
plus,
Yep.
and yet we're looking at it technically, which is, as technicians, you think, well, all the news is baked in the cake. It's going to come out in
Right.
the wash in the chart.
Right.
Um, I've noticed that this has been range bound more. It's been unusually range bound, right? I thought
Yeah.
last year was a pretty, it had nice moves. It would move up and then it would settle down to a $2, $3 range, or maybe
Yeah.
$4 range. Here, it looks like, um, it just doesn't know where to go. And you have these higher peak lows, you have these lower peak highs.
Yeah.
Is it just, at some point buyers come in, I guess is my point, right? At,
Right.
so it just sometimes it might be difficult to reconcile how we trade or how we listen to the news and how we have all these different influences, and we have these technical indicators that say, okay, if it goes this way, then we have this target. If we go that way, we have this that target. As a technician, I know that's like, perfectly fine. But
Right.
can you explain, like, how do we react to news as technicians when it's happening?
You know, in a perfect world, I'd be in a vacuum. I heard Jim talking about that yesterday, and
Right.
I wouldn't be, because like you said, as a technician, it's all baked in the cake, right? And we're reacting to what the market is showing us.
Yes.
And like the way that I always try to explain it to people is like, if I have information that I think is bullish, from a headline news or whatever else, or whatever I see in an article, or I look at the supply and demand from the EIA, whatever it might be, or OPEC or whomever it might be, if I react to that and I buy the market because of that, if nobody else is buying the market because of that same news, the market's not going to really do anything, right?
Right.
But if enough people see that information and they start reacting to it in the same way that I do, they start buying it because they think it's bullish news, or they start selling it because they think that, or shorting it because they think it's bearish news, the market's going to react.
Yeah.
So for me, I mean, I really try to, from a trading standpoint, put the blinders on to the news and just react off of what I'm seeing on the chart. Price rules,
Mm-hmm.
because price is basically reflecting anything that the market knows about itself. And the
Right.
market can only tell us what it knows about itself. And so it gets difficult with things like crude because of all the geopolitical pressures. That's one of the big things right now with crude. When we saw this, crude to me in the big picture would probably be a lot lower. I would think that we would probably be in the low 60s, if not even the 50s at this point, if it were not for the conflict that we have in the Middle East right now, between Israel, Iran, Pakistan, all these different kind of things going on there.
Sure.
Um, we also see, there's lots of different news going on, as far as the macroeconomics, what's going on with the dollar, interest rates, those kind of things. Um, it becomes, in my opinion, as a technician, as a technical analyst, it's a lot to absorb. It's a lot to take in. And so I really try to, as much as I can, put the blinders on. Again, in a perfect world, I wouldn't even read any of the news.
Right.
Really, the only reason I do is because I have to be able to speak with clients about it intelligently and be like, well, okay, the geopolitical pressures right now, or the storage numbers this week, or whatever else, right?
Sure.
But
Sure.
for me, it's looking at these markets from a purely technical standpoint. And like even earlier, Mike, when you guys were talking about your micro crude trade, he talked about putting in a profit target right around 70 because we were pushing to that level. And I smiled and pulled up my crude chart because, 70 is one of those psychologically important numbers. But right now, 70.06 is sitting right at the 62% retracement of the move down from 71.51. So
Okay.
I think that was a perfect move on his part because, one, we're in a range bound market. And this thing, like I said, every time it looks like it's going to break to the upside, it breaks back down to the downside. So from a day trading standpoint and intraday trading standpoint, we have to have that in mind that this thing, it's funky right now.
Right.
And so, placing a profit target, just below 70 or right around 70, in my opinion, was a good move because that's an area where I would see on a big day up like today, we're going to have some resistance there. That's an area where I would expect to see a pullback, take our profit, live to fight another day. I think Jim had mentioned, you never go broke by taking profits, right?
Right.
So,
Right.
that's one of those things where in a range bound market, I love trading trends, I love trading swings, but you get into a range bound market like this, sometimes you've got to be willing to say, hey, look, I've made some money here. Let me go ahead and get out, lock in those profits, and let's look to see, does it pull back from the 70, the 62% retracement? Do we get that pullback? And then do we start to get another leg up where now we can start to say, okay, let's look the time of entry back in using our trading indicators, and whatever else, so that's the kind of thing that I would be looking at is once it gets up into that $70 area. This is an intraday case bar chart, fairly
Okay.
big. It's a 50-cent case bar chart, about half of the daily average true range right now. And, but once we get into that area, like if we get, push up towards 70 and we start to see a pullback and we're getting, we hold something like the 38% retracement. Like, so let's say that it pulled back from in here. This isn't perfect right now, but it pulled back from in here, We get to 69, we hold that 69, which is a 38% retracement, and we start moving back up, and we start getting buy signals with our statware indicators or whatever indicator you use. And you're getting a buy signal. That's going to be a perfect opportunity to get back in.
So Dean, do you see when you see psychological numbers like that, do you smile? Like, do you say, "Hey, that helps my case a little bit." Like, oh, by the way, this just might be a natural place to people put in orders, and it happens to coincide with these Fibonacci levels or these, case levels.
Yeah, those psychological numbers. So like in Crude, it's usually every $5. That even
Right.
$10 marks are really big, 70, 80, 60, those kind of things. I do get a little grin on my face when I see those, but the bigger grin, like the Joker smile, comes when I see the confluence where I have something like the 62% retracement sitting right there. And then we also, like, if you kind of look a little bit closer, we have the 50-day moving average sitting just below. I know it's really hard to see on this
Can,
chart.
can you turn on, yeah, can you turn on the crosshairs real quick?
Oh yeah, my bad, on this
That'll help
chart here.
everybody see where you're
Yeah.
pointing.
So
Yeah,
right
right here.
here, right here, right around 69.80, we have the 50-day moving average. At 70.06, we have the 62% retracement. And then sitting right between those is, right around 70 is that psychologically important number.
Sure.
So again, this is an area right around 70 where I'm going to look at it and say, hey, this is a big number. This is an area where I could really see the market try to pull back. And I mean, I know it's range bound right now and it's a little hard to see, but like yesterday we had an inverted hammer.
Yeah.
Um, we're confirming that today by closing above last Friday's open. And
Right.
so, again, we have a reversal pattern within a range, so I don't take it as seriously. Those candlesticks, I usually want to see those at the extremes, at the highs and the lows.
Well,
But
but you could even take them as a short-term reversal, right? It does come at the
exactly,
end of a five candle, downtrend. So, that's the extent to which I would trust it, if you will, right?
exactly. I mean, we saw, here we had, kind of like I mean, that's not really a pattern, but, we had a little bit of like a long leg doji, or you might even call it a hanging man.
Sure.
We had the big move down here. We have a big bearish engulfing line. We had a big bullish engulfing line here. So yeah, they're still meaningful. For me, it's not necessarily saying direction when we're in a range like this. Oh, this is a trend reversal. It's more just a directional reversal within the range, telling me, okay, we failed to break the bottom. Now are we going to try to retest the top?
Excellent. Excellent. Dean, this has gone way too fast. Um,
Always.
yeah. Where could people find you to learn more about what you do? And are you on YouTube, socials? Where can they find you?
Absolutely. So, casco.com, KASECO.com, our website, lots of great information there. If anybody's interested in taking a look at our analysis, we do weekly reports on crude oil, or, on all the energy markets, all the metals markets. I also do daily updates for those. Our statware trading indicators are on there. On the socials, anything is pretty much at Casco. So X, YouTube, uh, Facebook, LinkedIn. LinkedIn, you can follow me personally. I post stuff every week there on the different markets. So yeah,
Great. Dean, thanks again for coming in and
always a pleasure, Tom.
sharing your information. Yeah, our pleasure is all ours. We're going to
And I
take
hope
a,
to see you at the midwinter retreat.
I'm trying to get there. I'm trying to get
All
there.
right.
Um,
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.